Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about HDFC AMC, one of the marquee stocks of the stock market of today and which has gone up nearly 3 times from its lows in very quick time. So let's understand what's going on with the company and where you can buy the stock, where could we see the correction. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I am not in favor or against any company that I talk about. Now, about the company, the HDFC AMC was established in 2000. Actually, it got the nod from the BSE and the NSE to set up its mutual fund arm, I mean the HDFC, to set up its mutual fund arm in 2000. So over the last 19 years it has been a top level fund, you can say, of mutual fund for all retailers all across India. And that is why you would remember, or you would know, that there is HDFC blue chip fund, HDFC mid cap fund, etc., in which people put in a lot of money month after month, and this is the company that governs that. So it is the HDFC AMC which earns from the funding that those mutual funds receive, and that is why the stock is running, because you consider such things as probably a brand. So HDFC mutual fund itself is a brand, just like Maruti is, just like Whirlpool is, etc. So it provides mutual fund and other management facilities which are related to savings, and we have the ELSS, the savings scheme, etc. And this is backed by a brand like HDFC, and that is why the stock has such a big backing. It holds the largest investment from retail clients, so most of the money that comes in from retail players is into the HDFC mutual funds, which are of different levels and categories. And it has been a market leader in this space since its inceptions because of the pedigree that HDFC had over the years. HDFC AMC also commanded a market leadership in this segment of mutual funds from 2000 2001. About the financials, well, the sales were quite tepid at around, you can say, 6% or so, 6 to around about 5 to 6% growth, whereas PAT has grown by nearly 80%, and that is where all the moat lies of the company, that profitability is growing sharply because of the margins expanding, because of what the Nifty has done, what the stocks has done, and most importantly, how well their funds have performed. And so an 80% growth company will always have a very high PE, and that is what we are seeing with HDFC AMC. Plus, being into a segment of mutual fund debt, etc., this company has no debt, so this is just tremendous, growing at 70-80% and without any debt. A return on equity which is unheard of 35%, and an operating profit margin of 78% for the year, 60 odd percent for 3 years average, is just outrageous, to say the least. And probably that's why the stock is running like hell at the moment. So why has been the euphoria? I talk about moat in some of my videos earlier, and I have talked about moat when I discuss about picking long-term multi-baggers, etc. This is the company that has that moat, because people will keep pumping in money into mutual funds. People will always get into equities in some way or the other, and the best way for them to get into equities is through mutual funds all across India. And this is the company that holds the largest investments in any mutual fund, and this is where the moat lies. Plus, it has the leadership at the moment, because most of the money come into, and there are many mutual fund companies are in India. There are at least 100 companies, but this is the leader. Exceptional return ratios, as I just mentioned, and the most important of all is the management, because this is backed by the HDFC management, which is considered probably the most clean and most honest, transparent management in the Indian industry or Indian business circle, and hence we see a lot of investment coming into HDFC AMC. And also you can compare it with something like a DMart. Even Infosys have had issues over the last 15 years of governance, of numbers being up and down, etc. We have seen the pedigree of DMart with Radhakrishnan Damani sir, and now HDFC as is in the same league, and probably HDFC coming up with any kind of you would say stock or any kind of IPO would have the same backing as HDFC Bank. So HDFC MC falls into that category. Longevity of business is there. You cannot say that business of equities or investments or SIPs would go out of shape. It may fall big time like we saw in 2009, but it won't go out of the picture at any point of time. So one needs to take that into consideration as well. The quality you can see in the right now in the market, it is about quality. Over the last 2 years we have seen that only quality have moved, and it is selling at a premium, and that is what we are seeing with the HDFC AMC. With the kind of quality it has, because of the reasons I just gave you, this stock is selling at around 60-65 times earnings. So now we are coming to the most important part of this presentation, is about where you can buy the stock, or can we see a correction. It currently trades at 63 times earnings, but if a company that is growing at 60-70%, or you can say on an average 50 to 60%, to quote at 63 times is not unusual. We have seen DMart quote at 115 times. We have seen at the most uh, peak of its heydays, Infosys trade at even 200 times. So it's not that it is trading expensive. We could see it go even further higher, probably 20-30% higher from here. It's but what is interesting is it trades at 37 times sales, and this is slightly, not slightly, but extremely expensive to what it does. The sales is around 2000 crore, whereas the market cap is at 74,000 crore. It has already run up 3x from its lows of around 1240, 1250. So you have to take that into consideration. The high it made was 3750, so nearly 3x from the lows. I believe that we could see another run up to around 4,000, 4,300 at best, and probably from 43, 4,400 when the stock would be trading at what, something like 80 times or so. We could see a sharp correction, and that correction could easily be at least 20%, if not more. So if we look at the technicals, we have the 50 you can say exponential moving average of 50 EMA at 2910, while the 100 exponential moving average is at 2620. Somewhere between this, somewhere between 2620 to 2910 is where you could consider buying the stock. And remember that all stocks correct, so it's not that this is going to go up all the time. Never buy a stock at its peak, never buy a stock at its 52-week high. Those companies are good, but don't buy it at 52-week highs. Wait for them to correct and then get into such companies. So wait for at least a 15 to 20% correction, and only then get into the stock. Between levels of 2600 and 2900 would be the best time to buy. So what needs to be done? I believe that you need to avoid at these levels of around 33, 3400, or whatever it is quoting at 3700. Wait for it to make the final hurrah, as all stocks do. And I can give you an example of Dixon Technology, although it is a small cap compared to what HDFC AMC is, and the business is totally different. But I am talking of stock chart. So Dixon made a debut at 2500, moved to 4400 and then corrected back to 17, 1800, 1850. So wait for a massive decline in such stock. I am talking of 20%. This could easily go down 30, 40%. Uh, Irrespective of the results. So we always see corrections. So wait for corrections in such stocks. At least wait for a 20% correction from the peak, and then get into a stock, and also make an SIP into such a company over the next 1 year or so, rather than just buying in lump sum thinking about that it is a marquee stock, let's just buy it right now because everybody has it. No, make an SIP so that you can get a very good average price out of it when you finally complete your buying. So wait for at least the 50 exponential moving average to be breached, which is around 2600 or so. uh, Sorry, 2900 or so, or I would say wait for 2700 or so to buy. 2500 is a strong support, so take that into consideration. Look for massive falls to buy, so falls of 5 6% into the stock because of any reason. Wait for that and buy into the company. Easily it can correct 20 25% from its peak of 3700 that we have seen. uh, it is a very good long term buy, so this is, you need not worry about it. Over the next 8 to 10 years it's going to make you a lot of money at around a CAGR of 18 20%. But try to buy it at a reasonable price rather than buying it at a steep price, because your eventual gain or eventual money that you make out of a stock also depends on the buy price that you buy the stock for. So this was my video on HDFC AMC. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.